let's begin. We'll now solve question number 4 from our September 2024 examination. And this question is on the topic of amalgamation of companies. Shall we begin? The balance sheet of Well Limited and Nice Limited is given to us in this question. What is it that they want us to do? Come to the end. Balance sheet, notes to accounts. Leave both of them. Details of trade receivables, trade payables is given. That also you just ignore. Come to the end. Oh my God, very good, very big question paper. No, at least 1, 2 question papers. You take question paper in the format of ICA question paper and then take it. Not like we copying it, putting it in our font style and then giving it. The reason is, if the same question, if I put it in the material that I have given to you, it will come to hardly 1 page, or in fact 3/4 of a page. What happens when the print question in the ICA study material is line spacing between two lines is more, and the width of the paper is also small, length of the paper is also small, line spacing between lines is also more. Because of that, it has come to 4 pages. It will make you feel like you're doing such a big question. It is actually no. The class question that we've done is of the same length and similar number of adjustments. So just take that fear out. At least do 2 papers completely ICA question paper, take the printout, hold that 24-30 pages and then solve it, so that you will not be scared in the exam. When they taught in the class, each question was quarter page. Now when we're doing it, is each question is 4 pages. Sir is done cheating. Sir has not done cheating. Sir has only done teaching. Just have to remember this. So you are required to record journal entries in the books of Nice Limited. Nice, we'll do it. Prepare. Prepare balance sheet of Nice Limited after absorption. Okay, so Nice Limited is transferring. Nice Limited is very good. So we need to do accounting entries in the books of Nice, and we also need to do balance sheet in the books of Nice. Okay, nice. Come to beginning, then see what have they given at the top? Nothing here. No other piece of information. Ignore balance sheet and P&L. Okay, ignore balance sheet and notes to accounts. Start with the adjustments. Trade receivables and trade payables are also given. Adu notes to accounts. On 31st of March 2024, Nice Limited absorbs Well. Well is transferring its assets and liabilities to Nice Limited, who's transferring. I will make a note of that first in my books. If in case you haven't revised accounting entries, if you have not understood what is merger, purchase, transfer, transferee, you can always go back to revision video to revise entire accounting standard 14 and then come back to this question. Yeah, name of the transferor. Well, name of the transferee. Nice. Nature of amalgamation. And the last line they've told absorption. That should not be the reason for deciding it to be purchase. You need to check 5 conditions. You remember 5 conditions? If all the 5 conditions are fulfilled, it is merger. Even if 1 out of 5 conditions is not fulfilled, then it is purchase. All the assets should be taken over, all the liabilities should be taken over, including reserves and surplus, up to book value, and business of the transferor should be continued. Purchase consideration should be settled in the form of equity shares only. Only for fractional shares you can give cash, and minimum 90% of the shareholders should continue. That condition we cannot check anyways. But let's see what have they told in the question. For every 5 equity shares sold in that company, we are going to give shares in premium. Okay, looks nice so far. Debenture holders were allotted debentures, looks nice so far. Preference shareholders are given preference shares, looks nice so far. Bank agreed to waive off loan. Okay, expenses. Inventory is taken over at 10% more. Damar. One asset is taken over at a price other than book value. It is no longer amalgamation in the nature of merger. It ends up becoming amalgamation nature of, very good. For it to be amalgamation in the nature of merger, all the assets and all the liabilities should have been taken over at requirement. You got it? So observe. I would write here purchase. Got it? Then method of purchase consideration here. They've given details of payment. They've told how many equity shares to give, how many preference shares to give, and all of that. Whenever they tell what to give, how much to give, it is payment. Whenever they tell a lump sum money to be given, lump sum method. Whenever they tell assets are taken over at this value, goodwill is this much. Now tell PC, that will be NATO method, net assets taken over method. Here, because they've given the details, it is payment method. You don't have to write this mandatorily at the beginning of your answer. You will not lose marks if you not write this. But I always write this with the reason that these are disclosure requirements as per accounting standard 14. If you see the last part of AS 14 disclosure requirements, this is there. And moreover, writing this will make it easy for the rest of the problem. In the middle of the problem, you will not get doubt. ನಾನು ಯಾರು ನಾನು ಏನ್ ಮಾಡ್ತಾ ಇದ್ದೀನಿ ನಾವೆಲ್ಲ ಏನಕ್ಕಿದೀವಿ ಇಲ್ಲಿ no you will know who are you are nice limited okay I am nice what did you do you observed well oh full well ಹಾಕೊಂಡು ತಗೊಂಡ್ಬಿಟ್ಟಿದೆ what did you do purchase oh amalgamation nature of purchase how by payment of PC under payment method so this will make your life simple later okay then let's see the PC details what we have every 5 equity shares held by equity shareholders of well they receive 3 equity shares of nice if they have 5 shares in well, how many shares are they giving in nice? Three. Okay, remember that. Remember that. Let's write here. In well, if there are 5 shares, in nice there will be. In the well, if there are 5 shares, in the nice there will be. Akka. Very good. Then come back here. Well ಅಲ್ಲಿ ಎಷ್ಟು ಶೇರ್ಸ್ ಇತ್ತು ಸರ್ ವೆಲ್ಲಿಗೆ ಹೋಗಿ ನೋಡ್ಬೇಕು ಹಂಗಲ್ಲ ಇಲ್ಲಿ ನೋಟ್ಸ್ ಟು ಅಕೌಂಟ್ಸ್ ಅಲ್ಲಿ ನೋಡಿ don't consider this different share capital. Look at equity share capital. Well is which column? Well is right side column. Nice is left side column. How much is the money? 12,500. 12,500 lakhs are thousands are? Thousands. Thousands. Don't assume lakhs. Yeah. 3 zeros is thousands. 5 zeros is lakhs. Yeah. If you assume thousands to be lakhs, what will happen? They will give 2 zeros. 14, no. Double digit. 0. Pakdale 0. Was talking about correction. Okay. Do 12,500 divided by 100. 120. 125,000 shares are there. 125. Very good. Let me write here. Here there are 125,000. 125 followed by 30. Correct alva? So if you have 5 shares in well, they will give 3 shares in nice. If you have 5 shares in well, they'll give 3 shares in. If you have 125,000 shares in well, how many will you get in nice? 125,000 into 3 by 5. What do you get? 70. 70. Akka. Very nice. Now, right here, 75,000 equity shares. Hey, nominal value 10. Hey. Sorry, 100. 100. 100. 100. Sorry. 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 My mistake. Issued at a premium of 20. 100 rupees share, 20 rupees premium. Can I say 120? Right here, 75,000 equity shares in Nice Limited of rupees 100 at premium of rupees 20. That is issue price of 120. So what to do? Take 75,000 multiplied by 120. 90. 90. Hey, ಒಂದ್ಸರಿ ಹೇಳಿದ್ರೆ ಅರ್ಥ ಆಗಲ್ವಾ ಅರ್ಥ ಆಗುತ್ತೆ ಬಟ್ ನೀವು ಹೇಳಿ ಕರೆಕ್ಟ್ ಆಗಿ ಅಂತ 90 lakh done. What's after this? Let's see the next adjustment. Second adjustment goes like this. 10% debentures of well limited are allotted to such 9%. Oh, this is not counted now. Why? Is this PC? No. PC andre purchase. Oh my God. If you give it to equity shareholders or preference shareholders, it is PC. If you don't give it to equity shareholders or preference shareholders, it is not PC. You got it? What if you give debentures to equity shareholders? PC. Yeah. What if you give equity shares to debenture holders? No, not PC. It is not about what you give. It is about whom you give that matters. Am I right? You get it? With a person whom you love, even if you fight, that is a form of love shower. With the person whom you don't love, even if you shower love, it is considered as an hatred only. You get it? Yeah. To your enemy, you send one nice letter with all nice words. ಈ ಲೆಟರ್ ಏನೋ ಇದೆ ಬಾಂಬ್ ಇರುತ್ತೆ ಬಿಸಾಕಿ the person whom you love send bomb. They're like, hey, ಇದ್ರಲ್ಲಿ ಏನೋ gift ಇದೆ. This is a fake bomb. Once this blast, there'll be happy birthday and there'll be all papers. So it is whom we give that matters. To equity shareholder, debentures given is also PC. To debenture holders, equity shares given is also not PC. Understood? So this is not PC. Where do we consider this? Drums. Ali D. Drums ali D. So this will be considered as D in drums. For those who understand drums, please revise once you will understand. So really in AS14 drums ಇದೆ. AS14 ಅಲ್ಲಿ drums ಇಲ್ಲ. In our story of understanding amalgamation, there is drums. Come to the next adjustment. Next we have 10% preference shares of well limited are to be paid 10% discount are to be paid at 10% discount. Hey, interesting. This 10% discount, is it discount on issue or discount on redemption? Discount on issue or discount on redemption? Discount on redemption are to be paid at 10% discount by issue of 9% preference shares. 9% preference shares are issued par. 10% preference shares are redeemed discount. When would have been discount on issue? They should have given this word discount after 2 3 words. By issue of 9% preference shares at discount. 9% preference shares are issued at ah nice, no? Nice, well, sir. Okay, whatever. So observe how much is the nominal value of the shares. Come to notes to accounts. Notes to accounts, notes to accounts. 1800. Am I right? 1800 shares, Allah. That is 1800 thousands rupees. That's right here. Nominal value is how much? 1800 thousands. So write 1800 followed by 3 zeros. 18 lakh. If not, take calculator. Do 1800 into 100. ಮಾಡ್ತಾ ಇದ್ದೀರಾ ಮಾನ ಮರ್ಯಾದೆ ಇಲ್ಲ. That's how much did you get? 18 lakh. Discount minus ಮಾಡಿ. How much discount? 10%. ಏನೇ ತಗೊಳ್ಳಿ ಸರ್ 10% discount. 10%, 10%, 10%. 18 lakh ಮೇಲೆ 1 lakh 80. Can I say 16 lakh 20 is what is supposed to be paid? This is settled by issue of equity shares, preference shares. Preference shares. 9% preference shares in NICE Limited. NICE. I think though they are also having nominal value 100. Issued at par. Issued at divided by 100. 16,000. So number of preference shares to be issued in NICE Limited is 16,200. So can I say we're issuing them 16,200 9% preference shares in NICE Limited of rupees 100 each at par. Mutual funds advertisement is over. Now do 16,200 into 100. 16 lakh 20,000. Now take the total 90 lakh plus 16 lakh 20,000. 1 crore 6 lakh 20,000. What is this? PC, purchase consideration. Later they've given some money that you pay expenses on liquidation. ಅದು ಸತ್ತಾಗ ದುಡ್ಡು ಕೊಟ್ಟಿರಲ್ಲ purchase consideration ಅಲ್ಲ. Realization expenses should not be considered as part of purchase consideration. That will be straight away written as goodwill to bank or capital reserve or general reserve to bank. Where in the books of transferee in DRUMS, no, that is R. That is R. Sir, UMS? UMS unrealized profit, mutual indebtedness, statutory reserve. Okay, okay. Then we're done with PC. Next adjustment. This is bank waived off loan of 270,000 of well. Okay, they're telling some value of assets taken over, assets, liabilities taken over, and everything. This will help us determine goodwill or capital reserve. Assets and liabilities are not taken over at book value. They are taken over at some different value. What values are they taken over? Bank agreed to waive off loan by 270,000. And any other adjustment? Inventory is to be taken over at 10% less. Petars include 215. This is DRUMSLE M, mutual indebtedness. This will have no adjustment in assets taken over. PPE is to be revalued at 20% above book value. Okay, the adjustments are there with regard to PPE, inventory, and loan. PPE, no, when he was talking, he was started yawning. Correct, no? PPE, inventory, bank loan will be here. Short term borrowings, huh? I don't know, short term or long term. You'll get to know here. ಲಾಂಗ್ ಟರ್ಮ್ ಅಲ್ಲಿ ಇದೆ. ಅದೇ ಬ್ಯಾಂಕ್ ಅಲ್ಲಿ ಲೋನ್ ತಗೊಳಕ್ ಹೋದಾಗ ಲಾಂಗ್ ತಗೊಂಡು ಹೋಗಿದಾರಂತೆ. ಸರ್ ಡಬ್ಬಾ ಜೋಕು ಸರ್, ನಿಮಗೆ ಅಷ್ಟೇ. Now let's write that assets taken over and liabilities taken over. Okay, start with assets first. I will start with 16,380. I'll start with 16,380 PP. Shall I? Come to assets taken over. I will write property, plant, and equipment. 16,380 is the value. There is note number 4. I will see note number 4. Come to note number 4. Note number 4. Hello, not there only. Oh, down the table. Still CSK is in bottom of the table. But we're out of the table. Out of the like. They have not given PPE note to account. So we'll assume that there is only one PPE. Its name is PPE. How much is 16,380 as per balance sheet? There is some revaluation. What is the revaluation? Read that adjustment. 16,380. What is the revaluation? 20%. Oh, we need to increase it by 20%. Let me write here 16 lakh. How much? 38,000. Sorry, 16 380. Add three zeros. 1 crore 63 lakh 80,000. Am I right? Plus 20%. What do we get? 1 crore 96 lakh 56. Very nice. Then next item in the balance sheet. After that, next item that we have is sorry. Hey, illa. Okay, top of the table, RCB. One trade receivables. Trade receivables, is there some adjustment? Yes, mutual owings, mutual indebtedness. That will be adjusted post taking over. Right now, no adjustment. 1950, shall I write it as it is? Yes. Okay, let me write here. Trade receivable. Order in there. Oh, inventory. Oh, sorry, yeah. Inventory is right now 870, but there is some adjustment, no? What is the adjustment for that inventory? What should we do with inventory? Inventory, inventory taken over 10% more. Add Madipa 10%. 8 lakh 70 plus 10%. 9 lakh 57. Very nice. Then we have trade receivables. Trade receivables, no change. Yeah. Write it as it is. In trade receivables, there is one notes to accounts. We have two items in trade receivables. Debtors 1800, bills receivables 150. Write both of them separately. Debtors 1800 thousands, which is 18 lakh. Bills receivable, it is 150,000, which is 1 lakh 50,000. Then come back to balance sheet. What is the next item? PPE done, inventory done, trade receivables done, cash they don't have. That's it. Everything is over, no? Now we come to liability side. Let's start with short-term borrowings, 1975. Any adjustment? No adjustment. Any notes to accounts? No notes to accounts. Right? 1975 short-term borrowings, 4850 trade payables as it is. Less liabilities taken over. Short-term borrowings, 1975 thousands. How much is that? 19 lakh 75,000. How much is creditors? Creditors, that is trade payables, 4,850 thousands. 44 lakh. Oh, there some adjustment? Notes to accounts ಇದೆಯಾ? Bifurcation. Okay. 44 lakh and 450. ಅಲ್ಲಿ ನೋಟ್ ನಂಬರ್ನೇ ಬರ್ದಿಲ್ಲ. ಯಾವ್ದಕ್ಕಿದೆಯೋ ಅದಕ್ಕೆ ಬರ್ದಿಲ್ಲ. ಯಾವ್ದಕ್ಕಿಲ್ವೋ ಅದಕ್ಕೆ ಬರ್ದಿದ್ದಾರೆ. 44 lakh and 4 lakh 50. Creditors and bills payable have written separate. Can you write them together as trade payables? Yes, but I don't want you to write it that way. Then what's after that? Liability side. Short-term borrowings done, trade payable done. We'll see long-term borrowing. Borrowing, some liabilities are waived off. Let's take at the agreed value. Okay, trade long-term borrowings, we have two things: 900 worth debentures, 4,525 loan. I think debentures I'll write as it is. Shouldn't be a problem. Shall I? Or is there some agreed value? If it is redeemed at premium, no. Leave issue. If it is redeemed at premium, we should take that agreed value. 1 second, just see that adjustment. Debentures were allotted 9% debentures, as would bring the same amount of interest. Oh, see, old debentures is what percentage? New debentures is what percentage? They're going to give so much of 9% debentures, which will give same interest as much they would have got when it was 10% debentures. This needs small working note, okay? Observe settlement of debentures. What is the debentures in the old company? 10% debentures. What is the value? Well limited 10% debentures. 10% debentures, well limited. It is 900. Am I right? On 900, thank you. On 900 at 10%, how much interest would they be getting? 90,000. I would write here 10% debentures, 9 lakh. Am I right? Correct? 9 lakh, 900,000. Interest at 10% on that will be how much? Now, in the new debentures, they want same 90,000 interest. The interest rate is not 10%, it is 9% debentures. In the new company, Nice Limited. So we'll do, in order to get equivalent interest, you should do 90,000 divided by 9%. How do 90,000 divided by 9%? Should issue debentures worth 10 lakh in the new company. How much is the nominal value of debentures in the old company? Against this, what will be the value of debentures to be given in the new company? Have they told it will be issued at premium? No. So it is to be redeemed at premium. Those 9 lakh debentures, 9 lakh rupees worth debentures. You are giving them 10 lakh rupees worth debentures. No, 1 lakh is premium on redemption. So what is the agreed value of debentures? 10 lakh. So in our NATO computation, net assets taken over, 10% debentures of well limited will be written at agreed value of 10 lakh. It will be recorded at agreed value of, everybody got this? Very good. Come to the next item. What do we have after that? Loan from bank. It was 4525. Am I right? See here, what is the rate given? 4525. Where is that? Next one. 270,000. No, 4525 minus 270,000, which is 2,70,000. 4 lakh, 45 lakh 25,000 minus 2 lakh 70. 42 lakh 55. Everybody got this? That's it. Now identify our purchase consideration. I'll take the total of the assets separately. 196.56, 957, 1800, 150, 225.63. I'll take the total of liabilities separately. Then I'll do total assets minus total liabilities. What do we get? Net assets taken over will be 1 crore 4 lakh 83,000. This is the value of the assets and liabilities that we are getting. But how much is the purchase consideration that we are paying? 1 crore 6 lakh 20,000. If I'm getting assets and liabilities worth 1 crore 4 lakh 83 and we are paying purchase consideration of 1 crore 6 lakh 20, this will become goodwill or capital risk. Understood? Purchase consideration 1 crore 6 lakh 20. Net assets taken over 1 crore 4 lakh 83. Tell me how much is goodwill? 1 lakh 37,000. Come, everybody. Very nice. Now we have everything. We can comfortably go to journal entries. Remember the story for journal entries? First, receive the box. Then open the box. Assets and liabilities will pop out. Then kick the box. Kick only, no keeping. Kick. Then give him the purchase consideration. After that, when you are arranging the assets and liabilities, after that liquidator goes, you'll do RUMS. Got it? Let's start. First, when you open the box, when you receive the box name is business purchase. Entry is business purchase account debit to liquidators of well limit. Well, Visa. Well. Oops. This is being business purchased. From whom? Well. No, purchase from well. Then what is it that we should give him? We should give him PC. How much is PC? We've computed it. 1 crore 4 lakh, sorry. 1 crore 6 lakh 20,000. So I would write 1 crore 6 lakh 20,000 as business purchase account debit. Same is the money to be paid. I'll credit liquidators. Then I will give him PC. Sorry. I will open the box. When I open the box, I'll get assets, I'll get liabilities. That is the reason why we do this NATO computation. Whatever assets you written in NATO, same assets, same values, write it in journal entry. These assets will be debited, these liabilities will be credited. What happened? These assets will be debited, these liabilities will be credited. You will also credit business purchase account at purchase consideration. This assets minus liabilities is equal to NATO. You credited PC. But difference in the journal entry will be PC NATO difference, which is goodwill or capital reserve, whatever you would have computed here. You can cross check your answer once then. So let's do this. PPE 196.56, inventory 957, debtors 18 lakh, bills receivable 1 lakh 50. Shall I write this 1, 2, 3, 4 items at once? PPE, inventory, debtors, bills receivable. PPE, inventory, debtors, bills receivable. Amount 196.56, 957, 18 lakh, 1 lakh 50. Next, liabilities. Before you write liabilities, give one line gap. Why? Goodwill or capital reserve. If it is capital reserve, still you can write it at the end of the entry. What if it is goodwill? So ಅದಕ್ಕೆ ಮಧ್ಯದಲ್ಲೇ ಒಂದು line gap ಕೊಡಿ. Got it? Yeah. Then come to this liabilities. Short-term borrowings, creditors, debentures. These debentures don't just write 10% debentures. Clearly write 10% debentures in well limited and loan from banks. Shall we write them? Short-term borrowings, creditors, bills payable, debentures, loan from bank. Oops. Short-term borrowings, creditors, bills payable, debentures, and loan from bank. Amounts. 1975, 44, 450, 10, 42, 55. 1975, 44, 450, 10, and 42, 55. Now, that box will be kicked, no? When you receive the box, your debited business purchase. When you kick the box, credit business purchase. By how much? 1 crore 6 lakh 20,000. Identify the difference. 1 lakh. That's goodwill. Your balancing figure would match with the with the goodwill that we found here. Whatever goodwill we found here is 137. Here also, how much is the goodwill amount? 137. Easy. Make some noise. Very good. So box is opened, assets and liabilities are written. Here liquidity is waiting. Anna, ನಾವು ಸ್ವಲ್ಪ ಕೊಡೋಣ. He is waiting. We will give him money. Here we have credited, no, because it is liability. We are paying him. We will debit liquidator of well. There is a mistake. I will correct it to well limited. How much is the PC payable? 1 crore 6 lakh 20. How am I giving it? Equity shares, preference shares, and that's it. Yeah, equity shares. Listen to me very carefully. 90 lakh to equity share capital account. They're issued at premium. They've been issued at, understood? So 75,000 shares of rupees 100 each at 120. So 75,000 into 100 will be equity share capital. 75,000 into 20 will be security premium. I would write here to equity share capital 75,000 shares into 100. Very good. Security premium 75,000 shares into 20. Okay. I will also credit security, sorry, preference shares issued. Preference shares, how much? Come back to working note of preference shares. 16,200 issued at par. Par. So what will I do? 16,200 into 100. Shall I do that 16,200 into 100? How much is 16,200 into 100? 16 lakh 20,000. Being purchase consideration settled by issue of equity shares and car. Very nice. Come on, let's proceed. So PC is also paid to them. Now we'll have to do DRUMS. D. Debentures. Debenture holders are to be paid. No. Why? Papa. They have debentures of the company before us. That old company debentures they have. But that old company is wound up. No. Am I right? So they should be given debentures of new company. Now, one point of understanding here. When we had that old debentures, we wrote 10% debentures in W limited account. Debit the 10% debentures in W limited account. By how much? 10 lakh. Sir, but debentures in balance sheet is 9. I told you agreed value is 10. Credit new 9% debentures given 10 lakh. Sir, at par. Yeah, at par. P done in DRUMS. Next, R. Realization expenses. You check in the question. Is there any realization expenses of well limited which is to be paid by NICE? Just to be nice. Expenses of liquidation of well are to be reimbursed by NICE 55,000. We are paying. We will pay. If well limited would have done the entry, they would have done realization expense to bank. When we pay, we should write the entry bank account credit. Debit will not be realization. Debit will be goodwill because this is amalgamation nature of purchase. If it was amalgamation in the nature of merger, I would have not written goodwill. I would have written reserve. I hope everyone understood that. Yes, goodwill account debit to cash 55,000. Please do repetitive revision to ensure that you don't miss out on the small intricacies in the entries. Don't tell one entry tappaittu anta ಹೇಳ್ಬಿಟ್ಟು. Full tappe. You should write goodwill to cash only. If you have learned that you will write general good cash everywhere, it's wrong. But it's not goodwill to cash at every page, every stage also. If it is amalgamation in the nature of purchase for realization expense of transferor paid by transferee, entry is goodwill to cash. If it is amalgamation in the nature of merger for realization expenses paid of transferor paid by transferee, entry will be reserved to cash. We have covered the exact same thing in the accounting entries here. Under each possible case, I have given with the story when to write, what value, what entry to write, realization to bank, bank to realization. Here comes transferor, transferee, CCC, realization expense paid, goodwill to cash. This is amalgamation in the nature of purchase. Sir, merger, I'll show it later. Drums ಅಲ್ಲಿ D ಆದ್ಮೇಲೆ R. R in drums. Then you come to amalgamation nature of that should be slightly above. But you understand no that it should be changed. Ka. Yeah. Then after this goodwill to cash. Oops. E over R over U with, yeah. Unrealized profit. Is there any inventory sold by one to other? No. There is no inventory of transferor sold to transferee or transferee sold to transferor. There is no such adjustment. There is no such adjustment. ಇಲ್ಲ ಪೂರ್ತಿ ಕ್ವಶನ್ ಓದಿದೀವಿ. Then what is the next thing? M. Mutual indebtedness. Yeah. Mutual indebtedness is there. M. ಬರ್ದಿದೀವಿ ನೋಡಿ. We wrote M in the beginning only for this reason. As if it is that M ಅದು ಎಕ್ಸ್ಪೆನ್ಸಿವ್ ಜೆಮ್ಸ್ ಬರುತ್ತೆ ಗೊತ್ತಾ? M and M ಅಂತ ಹೇಳ್ಬಿಟ್ಟು ಅದು M ತರ ಬರ್ತಿದೀವಿ. Debtors of Nice Limited include 215,000. It doesn't matter. Reduce from debtors and creditors. Alva? No, reduce it from respective debtors. Reduce it from respective creditors. Whose debtors include? Nice. So Nice Limited's debtors has to be reduced. So I will write trade payables account debit to trade receivables. That is creditors to debtors. 215. When you write this in balance sheet, remember to reduce it from trade receivables of Nice and trade payables of well. Well, we've come to the end of entries because there is no statutory reserve in this question. Idya? Reserves and surplus nodi. What reserves do they have? P and L. By this we are done with entire journal entries. Sir, what should we do now? Balance sheet. Yeah. When we do balance sheet, no, remember to take balance sheet of the transferee company, which is Nice. Balance sheet of the transferee company, which is Nice. And we should take the impact of the entries that is given there. Take Nice Limited's balance sheet column and take the impact of the accounting entries given here. If you add the impact of that with this, you will end up with balance sheet. Shall we begin? To begin with, share capital, note number 1. Share capital will be note number 1. See the share capital of this company. Highlight a ticka. Tick ಮಾಡೋಣ. Circle ಅಥವಾ tick ಮಾಡೋಣ. 41,000 is there. Let's go to notes to accounts. Shall we go to notes to accounts? Come to notes to accounts. What do we have? 31,500 is equity share capital. Am I right? Take 31,500 and also add 3 zeros. Also add 3 zeros. It is liability, capital. Whenever there is credit, you will add. Whenever there is debit, you will deduct. Is that okay? Whenever there is credit, you will. Whenever there is debit, you will deduct. Deduct andre minus. Add andre plus. Okay. That it feels like I'm teaching you in Japanese. You will are like giving me subtitles. First entry, there is no equity share capital. Second entry, there is no equity share capital. Third entry, credit 75 lakh. Add ಮಾಡಿ ಹೇಳ್ತೀನಿ. ಮೈನಸ್ ಮಾಡಕ್ಕೆ ನೀವು ಇಲ್ಲಿ ಮೈನಸ್ ತಗೋಬೇಕು ತಾನೆ. You should take minus 31. You have taken minus. Okay, take minus 31,500,000 minus 75 lakh. What did you get? Minus ಯಾರು ಹೇಳ್ತಾರೆ? Who will tell minus now? Minus. I will write it here. 3 crore 90 lakhs divided by 100. 3 crore 90 lakhs I wrote here. 3 lakh 90,000 equity shares of rupees 100 each. Okay. Now, in this 3 lakh 90,000 equity shares, how many shares are issued for non-cost consideration? Cost is called the Kotiro shares. How many shares are given in the process of amalgamation? See working note, yeah. PC. How many shares? 75,000 shares are given for non-cost consideration. Right there. It's a separate disclosure mandatory for you to do. Right here. Out of the above, 75,000 shares have been issued on amalgamation for non-cash consideration. Okay. Next item. Come to the next item. We have with us 9,500,000 worth of preference share capital. Take 9500 followed by 3 zeros. Can I say 95 lakh rupees? See in the accounting entries, do you have preference share capital anywhere? Yeah. In the same entry where you written equity share capital, it's there. 16 lakh 20. Yard 16 lakh 20. 1 crore 11 lakh 20,000. 1 crore 11 lakh 20,000 will be new preference share capital of 9%. Divide it by 100. See, I will write here 1 crore 11 lakh 20. If you divide, you got 1 lakh 11,200. 1,11,200, 10% preference shares of rupees 100 each. Is this right? Out of this, how many shares were given for non-cash consideration? Come PC, 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 PC. 9% preference shares. Sorry, I'll correct it. 9% preference shares. 16,200. Disclose them. 9%. Happy? Out of the above, 16,200 shares have been issued on amalgamation for non-casu consideration. Take the total share capital notes to accounts is done. 3 crore 90 plus 1 crore 11 lakh 20. 5 crore 1 lakh 20,000. 5 crore 1 lakh 20,000. Got it? Now let's go to reserves and surplus. Shall we go to reserves and surplus? Reserves and surplus, we have 19,500, that is balance in P&L. Take this as it is. 19,500 thousands, which is 1 crore 95 lakh. 1 crore 95, am I right? Come to accounting entries. Do we have any area P&L? First entry, second entry, third entry, fourth entry, fifth entry? Yeah, write it as it is. We'll write here profit and loss account. 1 crore 95 lakh. Got it? Next, there is no other reserve there, but in entries we actually have one reserve, security premium. We can actually write it at the end, but I know it, I will take it right now. See here, security premium. How much? I'll write that in reserves and surplus. Shall I? Okay, in my reserves and surplus note, I would write here security premium. How much? 15 lakh. Everybody got this? Take the total. 1 crore 95 plus 15. Crore 10. This would also go to balance sheet. I can actually post at the end. I don't want to post it right now. I don't want you to do this in the exam also. Don't post notes amount immediately. Why? What if by mistake you have forgotten some item? Later you get to know that you forgotten. You have already posted total. It will be difficult for you to correct. If you have not totaled, if you have not posted the total, it will be easy. In fact, don't total also. Write the amount, move to the next one. Yeah. And leave more space than required. If you think reserves and surplus will take 4 lines, give 6 lines, 7 lines. In one page, write only 2 notes to accounts. One page may write only 2 notes to accounts. Sir, what if it's only one line of notes to accounts? Okay, balance space, tree is already cut. Don't be worried. And in fact, if you are environment friendly, you should write like that. Why? So that you don't mess up and you'll pass the exam in one go. If in case you don't and try to adjust, you will end up making mistake in amalgamation. You will lose 14 marks. You might fail and you might write exam again, because of which one more tree will be cut to print papers again for you. So don't do that. And soon become a chartered accountant, switch from paper to laptop and do things in Excel then. Then balance of P&L done. Then we have long-term borrowings. See in the balance sheet also, reserves done, capital done. Long-term borrowings 2,500. So 2,400, note number 3. What is it that we have? 11,200. Shall I take 11,200? Take 11,200 as a minus number. You take 11,200, 9% debentures as minus number. Come to journal entries. You have issued debentures, 9% debentures, 10 lakh. Matte minus ಮಾಡಿ. How much will it become in that case? 1 crore 22 lakhs. And this 10% debentures in W Limited, this 10% debentures in W Limited, gone. 10 lakh, 10 lakh, gone, no? Debit, credit. So let me write here 9% debentures as long term borrowing. 9 alva? Sorry, let me correct. 9% debentures. How many were there? We had 1 crore 1 lakh. We further issued 9% debentures issued to L Limited, alva? W Limited. That will be 10 lakh. Put together, can I say it's 1 crore 22 lakh? Say something. Very nice. Then loan from banks is the next item in the balance sheet. How much is loan from bank? 9,300. Am I right? Take 9,300 in your calculator. Minus 9,300. Okay. Not plus. Did you? Yes, sir. Now, come back to entries. Entries. What do we have? We have 9,300. Loan from bank somewhere? Yeah. 42 lakh 55,000 is the value at which we have taken. Minus 42 lakh 55. That should also be minus. This should also be minus. Basically, you add. Our loan was 9,300 lakhs. Basically, 93 lakhs. We have taken their loan at 42 lakh 55. Put them together to tell how much is our loan from banks. Our loan 93 lakh, their loan 42 lakh 55. Putting it together, 1 crore 35 lakh 55,000. Did everybody get this? Say something. Very nice. We are done with long-term borrowings part also. The total long-term borrowings. What happened? Crore is 1 lakh. After that, we have trade payables. Trade payables 15,740. Take 15,740 in the calculator minus 15,740 because it is liability and credit balance. Come to accounting entries. There will be one trade payables taken over, one mutual indebtedness adjustment. In the first entry, you have trade payables. Actually, trade payables separate. Come to notes. We have creditors. Take creditors separately. How much is creditors? Take 14,750 in the calculator. Did you take 14,750? 14,750 minus 14,750, that is 1 crore 47 lakh 50 minus 44 lakh. Basically, add these two. Am I right? From that, you will eliminate mutual indebtedness. Debit. So do plus 2 lakh 15. I'll show it to you by the way of a note. Observe in trade payables, you write creditors. How much was there? 14 lakh 75,000. Further, you will add creditors in well limited 44 lakh. You get 1 crore 91 lakh 15. From this, you will deduct mutual indebtedness of 2 lakh 15,000 minus Madi. You get 1 crore 89 lakh 35,000. There is one more trade payables, bills payable. This is cute and sweet and simple. Not much of difficulty. 990 lakh, 9 lakh 90,000. 9 lakh 90,000. Done. Here in the entries, how much do you have? Bills payable 4 lakh 50. 990 plus 450. 14 lakh. Very nice. I'll write here 9 lakh 90,000, 4 lakh 50, 14 lakh 40. Got it? Total 1 crore 89 35 plus 14 lakh 40. 2 crore 3 lakh 75,000. Okay. By this, we are done with trade payables. Come back to the balance sheet. Are we done with all the items on the liability side? No, no, no. Yay, we're done. Short-term borrowings, one is there. What was there in the short-term borrowings? Short-term borrowings. Have we taken it over? I think in the entries we would have had. Come to entries. We have taken some short-term borrowings, 19 lakh 75. Yenu etta gottilla. We have taken 19 lakh 75,000 worth short-term borrowings from our transferor. Write it as it is in the balance sheet. Short-term borrowings, 19 lakh 75. Yenadu? Yavoni gottu. Hey, for us to know, they should tell no. When they don't tell, I don't know. End of the story. Easy. After this short-term borrowing, so next we'll go to asset side only. Yeah. Panipa bega marana. 62,550. Take yeah, our asset 62,550. They have not given details of notes to accounts. 62,550, you take it plus. Don't forget 3 zeros at the end. Then in the journal entries, we have debited PPE 196,56,000. Add both of them. What did you get? In my balance sheet, I would write property, plant and equipment, note number 5. Note number 5. I would write here PPE 6 crore 25 lakh 50. Add PPE of well 1 crore 9650. Together 8 crore 22 lakh 6,000. Got it? Nice. After this PPE, we have non-current investments of 22,500. They have not given any note. There is no adjustment. There is no investments of our transferor as well. So I will take 22,500 as it is. I won't even draw notes to accounts. I will write in balance sheet straight away. Non-current investments 2 crore 25 lakh. That is 22,500 followed by 3 zeros. Inventory. My inventory 300. Their inventory 870 only. There is no adjustment. Take 300. Come to the entry here. Oh, sorry. There is some revaluation. 957. Take that 3 lakh and add 9 lakh 57,000. What do we get? 12 lakh. Very nice. So let me write in my inventory. My inventory 3 lakh. Their inventory 9 lakh 57. Putting it together 12 lakh 57,000. Got it? Next, after inventory, we have trade receivables. 65 lakh 90,000 trade receivables. Let me write. Our debtor 65 lakh 90. I'll write here. No, no, no. 65 lakh. Our trade. Oh, there is adjustment. No. Okay. Take 65 90. That, no, no. This has split. Yeah. Debtors and bills receivable. Debtors 62 lakh. Take 62 lakh plus. I will write 62 lakh here. I will add debtors of well limited what I'm taking over. Then I'll deduct mutual indebtedness. How much is debtors of well limited? How much is mutual indebtedness? Debtors of well limited taken over 18. 18 is to be added and mutual indebtedness is here. 2 lakh 15,000 is to be deducted. Shall I? Yeah. Where is it? Here. I will add 18 lakh, make it 80 lakh. I will deduct 2 lakh 15 mutual indebtedness. What do I get? 77 lakh 85,000. Then let's go to bills receivable. How much is our bills receivable? 390. There's 150. Did we touch anything? No. Ange barithini. 540. Total is 83 lakh 25,000. Am I right? Pakka. This 1 lakh 50, I should not forget to highlight it in the journal entry. This is taken care of. No. Here we have bills payable. Sorry, bills receivable. 1 lakh 50 taken care of. Next. What else is remaining in the balance sheet? Come to balance sheet, balance sheet, balance sheet. Last item. See, all the liabilities are over. All the assets are over except cash and cash equivalent. We had 48 lakh of cash. We did not have cash. Such a 48 in balance sheet. We have paid realization expenses. 48 lakh plus. See the first journal entry, do you have cash? Second journal entry, do you have cash? No. Third journal entry, no. Fourth, no. Fifth one, yes, 55. Minus, minus. Why? Because it is payment. I would write cash and cash equivalent by way of one notes to accounts. I would write cash and cash equivalent was 48 lakh. Less realization expense paid 55,000. How much do we get? 47 lakh 45. 47 lakh 45,000 has to be put to balance sheet. Everything is done in the balance sheet which is given in the question. But before you put the notes to accounts total to balance sheet and then total, just check journal entries once. If there is any item which is missed out, because amalgamation, post amalgamation balance sheet is pre amalgamation balance sheet of the transferee plus journal entries in the books of transferee. Am I right? Now, 1 crore 6 lakh 20,000 is debited to business purchase account. 1 crore 6 lakh 20,000 is credited to business purchase account. Damar, gone. Liquidators of well limited is credited by 1 crore 6 lakh 20. Liquidators of well limited is debited by 1 crore 6 lakh 20. Damar, that also. So we have goodwill of 1 lakh 37,000. That's related to balance sheet. Wait, there is one more goodwill. There is one more goodwill. 1 lakh 37,000 debit. 55,000 debit. Add Madi. 1 lakh 1,92,000. In my balance sheet, I would write 1,92,000 straight away. Sir, can I open notes to accounts? Yes, you can. Just a matter of fact, a tiny little discussion. This 1,92,000, how is it treated as per accounting standard 26? One accounting standard 26 says don't do anything. Take this as it is to balance sheet if it is part of the transferor's balance sheet which is taken over by transferring. However, if this is purchased goodwill by payment in cash, it has to be amortized over 5 years. Is this purchased goodwill or is this goodwill from the balance sheet of transferor? Purchased goodwill. Why? This goodwill is not there in the balance sheet of Well Limited. This goodwill arised, this goodwill arised as difference between PC and NATO. So what do we do with this? Amortize over 5 years. Any other intangible asset would have been usually amortized over 10. But AS quoting a special discount, 50% off, 5 years limit. Understood? Yeah, please do revise AS 26 also if you think you have forgotten this topic. 1,92,000. Amele, journal entry anything else left out? First entry full damar, second one damar, third one damar, fifth one damar, sixth damar, seventh one full done. What to do? Just close your notes to accounts and put it to balance sheet. Share capital 5 crore 1,20,000. Write note number 1. Share capital 5 crore 1,20,000. Shall I write reserves and surplus now? Come to reserves and surplus. How much is it? 2 crore 10 lakh. Am I right? Yes, sir. Right, 2 crore 10 lakh. Ta-da! Long term borrowing. See what's happening in long term borrowing. 2 crore 57 lakh 55,000. Come on here, right? 2 crore 57 lakh 55,000. Got it? Then let's see trade payables. Trade payables. 2 crore 3 lakh 75,000. 2 crore 3 lakh 75,000. Let me write 2 crore 3 lakh 75,000. So total, not later. Then come to PPE. PPE note number 5. How much? 8 crore 22 lakh 6,000. Shall I write it to balance sheet? 8 crore 22 lakh 6,000. Next, we'll write trade receivables, which is note number 6. Trade receivables, which is note number 6. How much is it? 83 lakh 25. Shall I write two items at a time? 83 lakh 25,000 trade receivables, 12 lakh 57,000 inventory. Shall I? Yes. 83 lakh 25 and inventory 12 lakh 57. Last one, eighth one, cash and cash equivalent. Come to the end. Cash and cash equivalent is how much? Oh my god. 47 lakh. Sote ho de, sote ho de. No, now guilty we will win. 47, 45. Take the total first on the liability side, then on the asset side. 11 crore 92 lakh 25,000. See here, 8 crore 22 lakh 6,000 plus 1 crore 92 lakh plus 2 crore 25 lakh plus 83 lakh 25 plus 12 lakh 57 plus 47 lakh 45. Cash and cash equivalent 47 lakh 45. We'll change the note. 1, 2, 3, 4, 5, 6, 7, 8. Numbers are right. We'll change it there. What do we get? 11 crore lakh 25,000. Yeah. It might look lengthy, but we did not find it uncomfortable at any point because when we did the concepts, we've done in the same order. Every time when we do the problem on amalgamation, we go in search of the adjustments. Adjustment will not take us by surprise. We know what adjustment to see at what time and what entry to write at what time. Got it?